Greetings, Dr. Jeffrey Scott. This is my Market MRI Pro update for May 6, 2025. Title this one, Fed on Deck. As everybody knows, the Fed meeting started today, Tuesday, and we'll hear mid-afternoon on Wednesday what the Fed's going to do. I think most people think nothing, but you wonder with the recent GDP surprise, inflation clearly coming down, will Powell surprise? If you want to reach out to me for any reasons, marketmripro@gmail.com, hgsidoc@gmail.com. If you're new to my channel, hit the subscribe, hit the alarm so you know I post them. I'll mention my top-down trader group. That's the best way to participate at no charge, of course. Sorry about not doing one on Monday night. I am in my Santa Fe home, and we went through thunderstorms, hail, thunder, snow, and we had a power failure from about the time the market closed. I was on a phone call with one of my friends, and it didn't go back on until 12:45 in the morning. So, needless to say, didn't get a whole lot of time to do any market prep. As always, these are for educational purposes only. Anything I talk about is in the spirit of education, not investment advice. The intent of videos demonstrate the tools, top-down analysis, and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. I have tools for multiple platforms, but am an independent trader. Just a couple comments about this. Thanks to those that attended the live seminar on 5/3/2025. Actually, I've had quite a few emails from people who watched it on YouTube. If you haven't seen it yet, there's 3 parts. One, how I look at top-down trading, and it includes multiple tools, HGSI, Wealth Charts, TradeStation, as well as my Market MRI Pro app. Then I did a launch of the new tool, Market MRI Pro app tool, and a discount was provided for attendees that I'll continue to honor for a little while. And then I talked about how I trade options. If you like these videos and you'd like to do it live, June 6th through 8th at the Residence Inn and Suites, Tustin, Orange County, $400. I should take off the $300 because now it's a tease, but $400 for 3 days, multiple speakers. Always get great reviews. Contact Greg Mills, GAM72054 @AOL.com. I wish I could put everybody in the room, but we capped at about 20 and we're getting close. So we'll open it up to the internet. And I think there's a couple spots left in the room. John Person, Dan Fitzpatrick, Chris White have all confirmed, and I'm still waiting to verify on Matt Caruso. It will be a great event. It always is. Top Down Traders, the name of my Google group. It's no cost to join. I exchange my thoughts there. I'll post things there when I don't post them in YouTube. We have a dialogue from time to time. Just go to Google Groups, look for Top Down Trader, sign up, and join us. And again, it's not for solicitation, and I'm not doing it to charge money. Know your news and earnings dates. Well, yeah, today was trade deficit, and Wednesday is the FOMC and consumer credit. I think it's going to be an interesting day. I do think there's a small outside chance that he surprises, but like most, I think we're going to continue to watch the data. No need to reduce rates. Maybe they'll talk about some more reduction of the quantitative tightening. But at some point, they're going to have to act if the economy continues to weaken, which I think it is, and the GDP showed that. Thursday, we got jobless claims and productivity and inventories. And then look on Friday. I mean, how many times does Powell get misinterpreted and the market goes one way, and then they put up a whole bunch of Fed speakers to talk us back? I wonder if that's not pre-planned here. So Tuesday night, AMD earnings came out, and just as you'd expect, they were good and talked about uncertainty and likely impact going forward. They're up a couple percent. Big day on Wednesday before the open. We've got Disney, Uber, Novo Nordisk, one of the GLP-1 manufacturers. And then after hours, AppLovin, Carvana, ARM, Lots of things going on there. It's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. That's it on the PowerPoint. Let's go look at the charts and let's look at the data. We'll start with what I call the daily briefing. This is on my machine all day long because I can come in here anytime, hit that green circle, it will update and give me the current quotes. I can see here from looking at the one-day close, VIX was up 3.9. That's never good, closing at the high of its range. Bitcoin was up 0.63 at the high of the range. Dollar closed at the low of the day, down negative 0.62. Spider was down 0.84. Q's 0.93. Diamonds 0.98. And the Russell was down 1.09. So clearly a weak day in the U.S. markets. It started weak and it continued weak, and it's probably related to commentary about tariffs and then some testimony to Congress today that suggested there's no ongoing talks with China. Then, of course, wouldn't you know it, the market closed and then came out a report that there'll be some meetings, high-level meetings coming up between China and the U.S. at the Treasury level. If you look at S&P 500 sectors and you try to figure out what was happening, utilities and energy led. What lagged was healthcare, industrial, and discretionary. Tech was down 0.83. So, a little bit of rotation from what we saw last week with a really strong market, a little bit more defensive looking with utilities up at the top. From a theme perspective, dollar down, silver up, gold up, uranium up, copper up, solar up, metals up. Kind of is that weak dollar, risk off day and rotation into those precious metals and away from really away from stocks. Up here you can see that at the 12-month, the new highs, my new low on the NYSE, kind of flat, a little bit negative, a little bit more negative on the NASDAQ. That's weakened since last week. Up here we look at the S&P 1500, NASDAQ, and NYSE. We look at the sectors positive today, 27% greater than yesterday. Industries positive, 31% better than yesterday, but only 30% of the stocks were up. 27% of the sectors up in the NASDAQ, 38% of the industries, 30% of the stocks. And in the NYSE, 36, 39, and 39% of the stocks. So more stocks were down than up. A weak day in the U.S. markets. Not a horrible day by any means, but certainly a weak day. If we go, let's start with the timing model. The timing model, this is just a daily model, and it just looks like we're getting into a flag on the major sector ETFs. So we're going to look at the weekly and then look at the indexes. We are at an area of potential resistance. We had a massive run off, really off of this bottom, and then a little bit of a pullback and then higher. A pullback to the 50 here would not necessarily be unhealthy, and then a bounce there. Right now it's a little bit of a gradual pullback with some narrow range bar days, which is a lot of indecision. If I look at the weekly model, we can see where the dailies are all in a buy, which is the line here underneath the chart. They've been in a buy for several days. The weeklies remain in a sell. So technically we have a retracement and a downtrend. And really what I think is the dominating factor right now is we are at coming into resistance on the dailies and obviously the weeklies. And we're stalling here as the market determines whether we're going to continue to go higher or is a retest or at least a pullback in order. If we look at the U.S. index ETFs, you could see this is the 200-day, and we have run up into the 200-day, are flagging just below on the spider. The spider on the market, as we talked about before, was down about 0.84. The Qs were down 0.93. You could see a little bit of a flag. Similar, not as clear cut on the diamonds, which were down 0.98. The Russell, which was the laggard, again flagging here, down 1.09. The VIX went up a little bit, 4.7%. 4.7 is a big number, but remember it's a $24 instrument. And the dollar was down 0.62. A weak dollar, you know what that means on the commodities. And we saw gold. I mean, how many days do you see gold move up 100 points a day? It's crazy. Here's a GLD, which is not the futures, and you can see GLD was up 2.8. Silver, which is lagging, had a big day, up 2.51. You could see oil even gapped up with the weak dollar, up 3.58. And natural gas now giving us a little flag after bouncing and running up off the 200. 10-year and the 30-year down a bit. So we got the 10-year down 0.74 and the 30-year down 0.41. If I look at the buckets to get a sense of the strength of the market, we still have more stocks in each of the indexes to the right of the midline. That means we're strong still. We've weakened a little bit. How do I know? Because this gray is yesterday's and the amount of green is much less. And here we've gotten above the gray. So there's been a shift to the left. There's very few stocks above, very few stocks below. Still stronger than neutral, but as we saw in the indexes, we're at resistance and perhaps modestly pulling back. On the breadth charts, you can see the NYSE, which got me all excited, popping above the 200 on Friday, could have told. And that's probably a bad sign. Will it pull back to the 50 and bounce? Who knows? And the NASDAQ, as we've talked about the Qs, but the NASDAQ composite flagging as well. We talked about how the breadth thrust here of stocks above the 20 was almost historic. And I also talked about how it was getting extended more than any other time going back several years, and that this was a place you'd expect the market to at least pause. And I think we're seeing that. White's the stocks above the 50, red the stocks above the 200. They're not problematic here, but we've taken out areas that in the past have been areas of reversals on that 17. So no surprise we're pausing here. Down here, the first button we have is new high, new lows. You can see negative on both. Advanced decliners were negative on both the NYSE on the left and NASDAQ on the right. And up-down volume was negative. No new singles down here. So my assessment on the market is we are in a retracement, in a downtrend. Now under pressure is how I would consider that, at resistance. We have a pivotal news event occurring midday on Wednesday, and I think that's going to dictate where the market goes. Futures are trading up right now. Perhaps it's because Bressert said he might be meeting with the Chinese equivalent of himself this soon in Europe. But the bottom line is, I think the market's on pause, waiting to see what the Fed does or doesn't do. The ratio charts give me a sense of what is leading. And we're looking for white lines up like the strength in Bitcoin here. That was one of the leaders. Communications is clearly strongest right now. Look at that straight line up and white line. Although staples, utilities, real estate, and healthcare are all defensive and they had pulled back last week, everything except for healthcare, that defensive looking picture improved in the market on Tuesday. Technology did not break down. It's up here. Discretionary, which is right here, has been pulling back a bit. So communications is the star. Defensive plays look like they're turning up. And I think we're all going to wait and see what happens with Uncle Powell, Uncle Fed Powell. All right, let's look at the JAS layout. So this is my typical trading chart. I like to be looking at the market as a top-down trader. I have 3,429 stocks in my universe today. Why? Because it'll fluctuate every day. I look at stocks in the NASDAQ, the NYSE, and the Amex, and then I put a $1 filter and a 100,000 filter, and these are what come up. I use those. I put everyone into a sector and industry group, and I look over here, and I could look at the S&P sectors, but stuffed not with the S&P 500 or 1500, but all the stocks in my universe. On the right, we have 130, 140 different industry groups representing all the industry groups that our stocks are in. So what I typically like to do is I like to identify what was the strongest, and it was utilities and energy, two things I don't have big positions in. And then I can look over here and see what are the strongest sectors, or rather industry groups here. We've got uranium, power, renewables, solar, coal, water, gas, oil and gas integrated. And now they're populating down here. I've got 81. Let's put on a filter and let's limit them to price over 5 and volume over 500,000. That gives me 49. Now I like to buy high to go higher. So I'm not expecting to see a lot of stocks here that look interesting. But notice that almost all of them are green. Let's go to a short-term momentum um, ranking tool and look at what's leading. Well, here's one that looks great. CEG, Constellation Energy, has broken out. If we see earnings are out, they came out, hey, today, and we already have them. So no, a little bit of a negative surprise, but up 17%. Revenue continues to go up another 10%, which was a big upside. Not sure how it's doing after hours and how the market's going to perceive, but these are going up as I think some of the data centers and the AI investments that they're going to need to do with energy. So pretty good day there for CEG. TLN, Talon Energy, don't know this one. It's another utility. It might be doing the same thing. Its earnings are the 8th, so I probably would not enter a position in a stock that I have no edge in. VST, Vistra Energy, I think very similar what it does to CEG, and this one is coming up closer to its moving average. Earnings are due tomorrow, so hey, again, same theme, interesting looking stock, but I'm not chasing something that's got earnings coming in one day. One Gas had a big breakout. Look at all those dots. Gap, volume, breakout, momentum, great relative strength in OBV, not too extended to chase, and earnings were yesterday with 13% change with a surprise 23% increase in earnings. Pays a 3.8% dividend. OGS might be interesting. Solar Edge. This is a stock that's been pretty beaten up. If you don't know this company, like a lot of the solar companies, they had their heyday, they sold off. Maybe someday it will come back, but probably without me. BTU is a coal stock. I see a pretty deep pullback. Let's just take a look up here. Earnings came out, don't look very exciting. I don't know if they were before the market or after the market. Let me just look real quick and see if I get a price on BTU. It is clearly not the pattern that I like, but with the current president, coal might be okay. Yeah, it looks like they came out with their earnings before. They pay a dividend, 1.44%, and the market certainly liked their earnings. So I would go down this list. GEV is another one of these electricity creators. This one is one that I've been in and out of. We bought it off of this move, Praveen and I. It pulled back, broke down here with the not sure that wasn't with the tariffs, but that was when there was some concerns, I think, about data centers and AI. It's starting to run. It's probably getting too far. You might wonder what happened to the high jumps. Too new. Doesn't have 200 days of data. So let's just look lastly at uranium. This one probably looks to me the most actionable. Why? Because it just broke above the 200. It's not extended by any means. It had good volume. It had breakout and momentum, relative strength in OBV, not extended, and uranium is a leading industry group. Now, has it gone too far? Maybe, but CCJ looks good. Earnings are out, 10% change. Did not, look at this. Negative surprise on revenue and on earnings and revenue, yet the stock has traded up on that information. So might be worth looking at CCJ. So there's a couple of things more attractive than I thought I would find. Now you can always not highlight the sectors and basically just rank the industry groups on whatever you want to rank, and you just go in and take the top 10 industry groups and look at them. So there's a lot of different ways, and I think these independent power producers is where that TLN, Talon Energy, Vista Group, NRG, don't know that word, XIFR, and then TAC. This has been an interesting group. So that's the top-down approach. Got a couple things there I might look at. Then I like the bottoms up, and there's a couple of ways. So today let's go into the setting up the scans. We already got price and volume. Let's look for pullbacks and uptrend, which is the type of trade I want to take. There's only 131 in the market right now. Do we have any with lots of dots? So I'm going to go very quickly. Centerra Gold. Must be a small cap gold name breaking out like all other gold. XPEL, nah, below 200. Another gold, and I think gold stocks look good. Another low cheap gold. Solar Edge. Yeah, why is this in here? Because it had gaps, volume, breakout momentum coming out of a squeeze, and maybe this is the time to buy it. But you know, $2.40 above is the 200, which it certainly was resistance over here. MUX, a cheap stock. Oh, surprise, gold. FMS, Fresenius Medical Care. Boy, that looks like an exhaustion gap, doesn't it? Very gappy because I guess it's an ADR, KGA. Big gap up. Let's look in here. Why? Earnings came out. Big surprise to both top line and bottom line. Well, that's certainly a big deal. Forward multiple of 14.28 doesn't seem to be that bad. And then let's see what the news says here. Top value stock for the long term. Strong organic growth and income. And now let's say you saw something here and you wanted to read it. You just stick on that. It's going to pop up right here and let you read the story. Really like what we built in. And this is the Market MRI Pro tool if I didn't mention it. So one way is just to start going down the list. I love healthcare REITs. Why? Because I sold my business, a lot of my buildings to them over the years. They have a good track record of paying their dividend. This one's 6.93%. And the most resistant business in America to a recession, besides probably prostitution. No, that was a dirty joke. I shouldn't have done that. But the biggest business is probably healthcare. And I like the healthcare REITs, and this one looks like it's setting up very nicely. Pony, low-cost AI stock. Somebody probably likes it. I don't know anything about it. I'd rather, this is, again, we're talking gold miners, but this is my favorite pattern. Beautiful uptrend, pull back, in this case only to the 17, and then a breakout on good volume in a good group, ORLA. So that's another way that I will look. And then I've got one other thing I like to do is let me take all these off, start all over, and let's build up the price and volume, greater than 500, price greater than 5. I think at this point I want things to be above their 200. And let's see what that brings us down to, 676 stocks. And then we'll look at my favorite scan, which is my 2-day up momentum. And don't see any. Well, that's a surprise. All right, then let's kill this. Let's look at it with no filters and see if we see any. We do, but these are all going to have a problem. 3 of them are less than $5, which is sort of my limit. And then Hershey. All right, there you go. That looks more normal. So what's triggering the signal? I have a bunch of dots, but if you start at that yellow line, which is the squeeze, the first line is momentum. The second is a breakout. The third here is is volume. And the fourth one is a gap. So you could see big moves often have a lot of dots. So we've got the dots. We took out the 50. I just don't usually buy stocks like Hershey. Earnings are out. They came out on the 1st. Didn't set the world on fire, but it was surprises, so that's good. I'd probably pass, and the reason why I didn't make our filter is it's below the 200. And the other 3 are just inexpensive. All right. And then lastly, let's look at one other signal I like. And that signal is called the CPR, which is a trend reversal signal. Requires 2 time frames. Again, 5, 500,000 shares. And let's look at a couple of these. Upwork. It's an interesting looking stock pattern. Here's a stock uptrend, pullback, and a big move on massive volume. I'm sure earnings came out. 54% growth rate. Revenue is up a bit. Surprises on both earnings and revenue. PE forward's only 15. That looks kind of interesting to me. Now, do you expect it to pull back before it goes higher? Yes. But Upwork looks interesting. So what I'm doing here, the way I approach the markets, is I am building myself a watch list to look at the morning. Don't know anything about ThreadUp, but what I can do is I can look over here and first quarter results, revenue, secondhand clothing, retailer. I have to ask I don't know who to ask. I certainly don't want to ask my wife that, God forbid. Just kidding. Oh, I'm being nasty today. IPI, Intrepid Potash, big breakout. Was it on earnings? On earnings, look at the earnings change, revenue change, big surprise, big forward PE. But what a pretty big breakout on Intrepid Potash. Probably worth watching. Again, when I see that $100, I think about the stock's going to drift lower before it goes higher. So the point here, let me just show you what the requirements are. The requirements are that this green dot here, which I haven't told you about, which is my trend, short-term trend, it's called a CPR. I use a lot of heart names because, hey, I'm a doc. And that's the daily. And if I look at the weekly, it's got to have the weekly also be blue. So look at this weekly chart. Something has been dead for a long time. A Weinstein stage 1, moving to a stage 2. Maybe IPI is something to take a look at, especially with those massive earnings beat. Hope you all have an awesome day Wednesday. Remember the Fed. And go take a look if you haven't seen those videos that I did over the weekend on the web. Join Top Down Trader. We'll see you tomorrow.